exploring global currencies, trade, and Iraq's economic transformation. Welcome to today's insightful discussion, where we delve into the dynamic world of currencies, international trade, and economic shifts. One of the most exciting developments right now is Iraq's hosting of the 48th International Baghdad Fair, a significant event attracting investors and businesses from over 20 countries. With approximately 1,000 participants seeking collaboration and investment opportunities, Iraq is positioning itself as a growing economic hub. Why Iraq is seeking international investment? Iraq has been actively working to create a stable and secure economic environment to attract investors. Stability is crucial for businesses looking to invest, and the Iraqi government, backed by the United Nations, has been reinforcing its commitment to economic security. This increasing focus on financial stability is making Iraq an attractive destination for foreign and Arab investors alike. Additionally, Iraq's parliament recently approved an amendment to the 2023 General Budget Law, addressing key economic issues such as Kurdistan's oil exports and government employee salaries. A government official, Shakwan Abdullah, confirmed that no further obstacles remain in resuming oil exports. These developments, combined with ongoing economic reforms, indicate substantial growth potential for Iraq's economy. Understanding currency fluctuations. One of the lesser-known but critical aspects of global trade is how currencies fluctuate. You might be surprised to learn that many currencies are subject to strict movement limits. For instance, certain currencies regulated by institutions like the International Monetary Fund, IMF, and the World Bank can only fluctuate by a maximum of 2% up or down within a 90-day period. This rule is in place to ensure stability in financial markets, preventing unpredictable exchange rate swings that could disrupt international trade and investment. For businesses and investors, this limit provides predictability, allowing them to plan and make strategic financial decisions without fearing sudden market crashes. The Iraqi Dinar, coexistence of old and new notes. There has been significant discussion about the coexistence of old and new Iraqi dinar notes. The Central Bank of Iraq, CBI, has assured the public that both versions will remain valid for the next 10 years. This means that if you still have older dinar notes, there is no immediate need to exchange them. You have a full decade to decide the best course of action based on how the currency's value evolves over time. For investors, this long transition period provides financial flexibility. You can monitor the dinar's market performance before deciding whether to exchange your old notes or hold on to them for potential gains. Given that the dinar is subject to the 2% fluctuation rule, you can also rest assured that any changes in value will be gradual and manageable rather than sudden and extreme. How this affects investment strategies. Since the dinar's value can only move within a 2% range every 90 days, this creates a cushion against dramatic losses. If the value rises, investors have time to decide whether to cash in their profits or hold for potential future appreciation. Conversely, if there is a slight decline, it remains within a controlled range, offering financial security for businesses and individuals alike. This measured approach makes the Iraqi dinar an attractive currency for those looking to invest in a relatively stable environment. Additionally, Iraq's participation in global currency baskets, such as those managed by the IMF, enhances its financial credibility and could lead to greater international confidence in its economy. Transitioning to smaller denominations. Another major economic shift in Iraq is the gradual transition to smaller currency denominations. The CBI has announced a plan to phase out large dinar notes, removing extra zeros, and adjusting denominations to more practical values. For example, the 25 dinar note may be replaced with a 20 dinar note, At first glance, this may seem like a minor adjustment, but it has significant economic implications. Lower denominations can make pricing adjustments easier for businesses and improve efficiency in everyday transactions, particularly in cash-based markets. Public reactions and economic impact. As with any financial transition, there are mixed reactions. Some individuals welcome these changes, seeing them as a step toward a stronger economy, while others are uncertain about how this shift might affect daily transactions. However, the CBI has assured the public that the transition will be gradual, allowing time for adaptation and ensuring minimal disruption.